sunny in Van where the grass is always greener. On this channel, we provide information and education on real estate, cryptocurrencies, the blockchain, and business. Disclaimer alert, this information and content is for educational purposes only. This is not financial or professional advice. The affiliate links on this channel may pay us out some commissions or some referral fees. It does help out this channel and provide us some income that helps produce this content. We do hope it brings you a lot of value. We put a lot of time and effort into these videos, and this is a fairly new channel. Our first episode came out last week, and this is our second episode of the season. We do hope you enjoy. With that being said, let's get right into it. All right, let's check out some news in the real estate market in Canada. Fraser Valley real estate market 2022 highs, lows, and return to balance. In a year that saw prices peak early on, feeding off the momentum of record-breaking sales in 2021, the Fraser Valley real estate market came back down to earth. New listings lag as Fraser Valley real estate market sees third month of declining sales, with sales down almost 7% from October and new listings off by more than 20%. The Fraser Valley housing market continues its slowing trend. All right, let's go over to another page here. Real estate in Canada. Canada home sales dropped 22% from last year as rates rise. The Canadian housing market continued to cool in May amid rising interest rates, with their average home price slipping to $700,000. Let's go over to another website here, BNN Bloomberg. Montreal home sales in December fall 39% compared with year ago. Professional Association of Real Estate Brokers says home sales in Montreal last month fell 39% from a year earlier to a level not seen in December since 2014. Toronto region home sales down 48.2% in December from previous year. Vancouver's December home sales down 52% from year ago. BC Real Estate Board. Calgary December home sales down 31% from last year. BC becomes first province to require 3-day cooling off period for home buyers. British Columbia has become the first province to require a 3-day cooling off period for buyers after they've signed an agreement to purchase a home. BC government increases homeowner grant limit as home value rise by 12%. The British Columbia government is boosting the homeowner grant threshold to $2.1 million for this year as the average property values increase by 12%. Ontario and British Columbia headed for a buyer's market, RBC says. Canadian Real Estate Association reports home sales down in November. Vancouver's November home sales fell 53% from a year ago, 15% from October. Calgary's home sales down 31% from last year. The Calgary Real Estate Board says home sales in the region ended the year on a record high, even though December sales fell 31% from a year ago. Mortgage rates inch up. Home buyers are waiting for rates to decrease more significantly. The 30-year mortgage rate is averaged at 6.48%, Freddie Mac said in its latest weekly survey on Thursday. Let's see if we can see some more real estate news here. U.S. home searches spike on the Zillow of Asia. Hong Kong stocks are off to their best start since 2018 on China recovery hopes. Manhattan apartment sales fall 29% in Q4 2022, biggest decline since start of the pandemic. Mortgage demand plunges 13% as interest rates head higher again. All right, now let's go look at the charts and see what the charts have to say. We are now using TradingView. If you're interested in this charting software, Movement does have an affiliate link. We'll include it in the description below. This chart is about Bitcoin. Let's just see where we are when it comes to Bitcoin. It's looking like Bitcoin's at 16,700 USD, quite far down from its all-time highs. As you can see, it was almost at $69,000. Hopefully this Bitcoin will come back up. Who knows where this bear market will go, if it's going to continue to go downwards or it's going to continue to do some side action. Experts are saying that towards maybe the end of 2023, or early 2024, that this market will start to now become a bull market rather than a bear market. And hopefully your dollar cost averaging into this. Now, this is not financial advice. We personally do invest into cryptocurrencies. We are investing into Bitcoin. What I currently do is put a small amount in a weekly basis, if not in a monthly basis, whenever I can see a little bit of a dip. As you can see, there was a FTX debacle here. That's why this crashed during this time. It's gone up a little bit, but it continued to come down here. It is a little bit bearish. We're not sure what's going to happen with the markets, but continue to watch these on our weekly episodes so you can be a little bit more informed. We do believe Bitcoin and blockchain is the future, and that is why we do invest in the cryptocurrency. However, we do believe in the technology that it will be the future. Now let's move over to the Tesla stock. As you can see right now, Tesla is at $1.10 USD. That is down from their all-time highs around $414. As you can see, the downwards trend. Let's move over to Apple stock. Apple right now is 125 US. And let's see where this was as a high. It looks like it was almost at $183 US at some point. In December 2021, you look at $183 and now it's at $125. Now let's move over to the Amazon stock. Is right now at $83. Let's check out the all-time high that it had previously. You're looking at roughly $188. That was around July 2021, and it also was around that mark around November, December of 2021, but it has since then come down to $83 US. Now let's move over to some business news. We got some headlines here. Tesla cuts prices in China, other Asian markets as sales falter. Tesla cut electric car prices in China for the second time in less than 3 months on Friday, stoking expectations for a wider price war for battery-powered vehicles in the world's largest auto market where demand has weakened. I'm not sure how to say this name, Sodexo, quarterly sales top estimates as people return to offices. French caterer Sodexo reported on Friday's forecast beating first quarter sales as its on-site business surpassed pre-pandemic levels on a return to the workplace and other venues, while price hikes for corporate clients also helped. Details of Tesla price cuts in China, other Asian markets. Tesla cut electric car prices in China and other Asian markets on Friday, part of the efforts to stoke demand for output from its Shanghai plant, a person with direct knowledge of the plan said. World food prices hit record high in 2022 despite December fall. World food prices eases in December, making the 9th consecutive month fall, but gained more than 14% in 2022 compared to the previous year, to reach the highest since records began in the UN Food Agency said on Friday. Dollar hits 4-week peak on resilient U.S. job markets. The dollar held near an almost 1-month high on Friday, after U.S. economic data highlighted a still tight labor market that could keep the Federal Reserve on its aggressive rate hike path. Citigroup cuts U.S. stocks to underweight, favors European equities in 2023. Citigroup analysis turned underweight on U.S. equities on recession fears, but were bullish on European stocks, saying much of the pessimism was already priced in. Global stocks tepid before U.S. jobs test dollar stands tall. Global equities were set to end the first week of 2023 on a tepid note. The dollar stood tall as fears of higher U.S. interest rate hikes market sentiment. China hotels travel bookings perk up in boon for COVID-hit services sector. After 3 years of dealing with some of the world's toughest COVID-19 curbs, there are early signs that the Chinese consumers are gearing up to go out and spend again, particularly in major cities and tourist hotspots. Oil prices edge up on optimism over China's reopening. Oil prices rose as much as $1 on Friday, extending gains from the previous session, supported by hopes of a China demand boost and after data showed lower U.S. fuel inventories following a winter storm that hit at the end of the year. Russian ruble advances versus dollar, euro, and light holiday trade. Russia's ruble rose against the dollar and euro on Friday as oil prices lifted during thin holiday trading. All right, now let's go into our analysis that we do part of this show. Let's move over to realtor.ca and let's look for a home in Surrey, BC. Oh, you can look at our history. We looked down this at the previous show, so let's do it one more time here. Surrey, BC. And it's going to show up on the search here. Here is we'll look at 1+ beds and 1+ baths. Let's look at a minimum price of $275,000. And we'll go all the way up to $500,000. We're going to look for a condo around this price range. As you can see, the map in Surrey, there are quite a bit of properties in this area. Let's look over at Guildford this time around. Let's see if we can find a decent property here. This looks like there's 7 here. There is one listed here for $479,000. Let's go check out this property on 136 and 102. All right, before we get into this information here, this property is brought to you by Harjeet here, Personal Real Estate Corporation. If you have any questions, please reach out to Harjeet. It looks like he is part of the EXP on the 153 and 24th Avenue in Surrey. And there is another realtor on this page, Navjot here, or here. I'm not sure how to say the last name. I do apologize. But let's do a quick analysis on this property. And before we do, let's do a quick look at the pictures here. There's some greenery here, and you can see the building. And you can see the layout of the building at a balcony, living room, dining room, kitchen, bath, entry, the master bedroom, washer dryer over here. Looks like a decent layout. There's your kitchen. What do you guys think about this kitchen? The flooring, very minimal. Black faucets and handles here. Looks pretty nice. Look at that oven. Here's another picture of the kitchen itself. What do you guys feel about the backsplash here? Another close-up. Here's the wall oven. Bosch. They have this dishwasher open up so you can check it out. I guess there's some closet space over there. Here's a washroom. It looks pretty nice here. What do you guys think? Nice glass, stand-up shower. More of the washroom right here. The sink with some space to hold some of your items. Washer dryer combo inside a closet, I believe. Look at that view. That's a nice little view. Nice little room here for the living room. Another view. You got some mountains. You got the city view. That's not so bad. Look at that balcony. That's a beautiful view itself. Look at the mountains. You know, you could picture yourself coming out here on the balcony, maybe having some coffee, some nice conversations with the view. Canadian Tire, there you go. Some convenience if you have anything you need to get. Canadian Tire is right across the street. Looks like there's a lot of development happening out in Surrey. And I guess this is a bedroom right here. A little area to hang your coats right by the kitchen. Couple more pictures. The kitchen living room combo here, the little shot to see how much space you actually have. And it's not so bad. 1512. You do get a gym. You can exercise out here. Guest suite and a study. I guess it's a theater area. That's very cool. A little lounge for the tenants. That's some nice art on the wall. Another view over here. That looks like Central City out in Surrey. Nice greenery to walk the dog if you have any pets. Elevators to get up to the suite. Lockers for mail. Mailboxes. I guess there's a concierge or receptionist here. Parking, storage. Yep, storage right here. I guess this is the front of the building, maybe. Another shot of the building, and that's all for pictures. Let's check out what the realtor has put down under the description. Welcome to Georgetown, 1 by Anthem, 30-story tower built in 2022. So this is brand new. This is the first of 9 towers of Anthem's master planned community, walking distance to Surrey Central SkyTrain Station, SFU, KPU, future UBC campus, shops, restaurants, and more. East-facing floor plan with 452 square feet living area and 125 square foot covered balcony. L-shaped kitchen features high-end Bosch and Blomberg appliances, quartz countertops with full height backsplash and modern black matte accents, and more. 30,000 square feet of amenities included concierge entertaining lounge, co-work space, outdoor theater, dog run, fitness center, and guest suite. 1 parking and 1 storage included. Now this is 30 stories. Square footage of this unit sells for 452. Annual property tax are roughly $1,200. And it's only been on 1 day as of right now on realtor.ca. Let's look at some neighborhood statistics here. It looks like there's quite a bit of parks, transit friendly, daycares, grocery, car friendly, pedestrian friendly, shopping, elementary schools, restaurants, high schools, cycling friendly cafes, fairly quiet nightlife, and it's vibrant. Look at some more statistics here. It looks like the population size of this area on 104 and 140th Street by King George. I thought this was a Guildford one, I guess, but it ended up being closer to King George than anything. Population size is 899. Average household income in this area is roughly 92,000. Number of households in the area is 274. The median age of the people in this area is 46, 47 years old. Households with children, 63%, and the average household is 2 to 3 people. Now we checked out a little bit more about this property. Now let's head over to our analysis. We're going to take this number here, 479,000, and let's quickly head over to see what the interest rates are currently. Interest rates on this website showing quite a bit from different banks, but we're going to try to take the lowest one, which is 4.49 fixed rate. And we're going to take this interest rate and add it to our calculator that we have put together. It's full of analysis. Let's change this over here from a previous one that we had, and we're going to change that to 479 to change our property tax. Our property tax over here, I do believe that it was a little bit less than this. Let's see what it was here. 1,200. So let's go back here. 1,200. It gives us a little bit more of an accurate description of what's going on here. Now it is an interest rate of 4.49%, compounded semi-annually with the effective rate of 4.54%. Now let's go into our landscape dashboard that we have created to do a full analysis on this property. And here we go. All right, once again, this information included is for educational purposes only. This is not financial or professional advice. And let's go right into this analysis. This was on 25% before, but we're going to move it down to 5%. So this is for all the first-time homeowners and home buyers that are looking to buy a property like this. Let's do a quick breakdown so you have an idea of what to look for. Now, at a sale price of $479,000, if you were to put down 5%, your down payment is roughly $24,000. This would then leave you with a mortgage of $455,000. This is based upon a 30-year amortization period. You would end up with a mortgage payment of roughly $2,300. So now if this is your principal property, that means on a month-to-month basis to afford this property, you're going to have to pay $2,300 out of pocket on a month-to-month basis. Now, again, this is based upon a 30-year amortization period. Look at your income currently. Do you have enough to support this payment? Now, to be even approved for something like this, you need an average salary of $74,000. Now, this salary that is provided, this means that you do not have any other debts or loans. If you do not have any other debts or loans, you can afford this if you have a salary of roughly $74,000. Again, this is not financial or professional advice. Please do speak to a mortgage planner or mortgage broker. Now we're going to move on to a part of the show that I call Sunny to the Moon. Now this is something that we put together to let you know what would be your return on investment and what to expect over 5, 10, and 20 years and so forth. So let's get right to that. Let's move this over to 25% as a rental property. And this is going to change this whole analysis over here. Now, also, this is a condo. So let's change this over to 3.1. So it doesn't significantly move up just like a detached home would. So you just have a better idea of what to expect when it gets down to the 5-year mark. Now let's do a full breakdown of this whole thing and see what we could come up with. Now, as you can see, if you buy a property for $479,000 with a down payment of roughly $120,000, your mortgage amount will be roughly $360,000. Your mortgage payment will now be roughly $1,800. Now, the great thing about this, when you do have a rental property, you can now get rough gross rent of $1,700. What this means is you don't necessarily need to pay out of pocket $1,800. Now, this rent can offset the mortgage payment. The difference on a month-to-month basis would be out of pocket of only $173. that is much easier to afford. However, you're also looking to put down $120,000. Now, over a year's time, it means that you would have put out of pocket roughly $2,000. Over the years, at 5-year mark, you're almost at 10. At 10-year, you notice a difference. It's not so much. There's not much more out-of-pocket expenses. And over the years, you'll see that it'll start to reverse. The reason this is that over the years, there is an incremental increase in rent and eventually will offset the cost for you. A cool thing that we also like to do is look at the equity that's built. So on a month-to-month basis, on the payments that you're paying, you are building roughly $469 of equity on a month-to-month basis. After the first year, you would have built $5,700 of equity. The equity built in 5 years will become $31,000. Another thing that we like to do with Sunny and the Moon is the potential increase that the property would go up in 5 years. Now, the potential property value increase in 5 years, it could potentially go up to $558,000. That would be well above $479,000. The potential property value net profit in 5 years would then become $79,000, which would be the difference between $558 and $479. Now, if you do the potential 5-year return on investment on the down payment, which was $120,000, the rent, the equity, and the property value increase, if you combine that all together, you would then get 84% return on the initial $120,000 you had put down. Now, a cool thing about this is it does really show you where you really need to be able to earn a property like this or gain a property like this and how much income you can actually earn. Now, the minimum salary required with rental income is $38,000. The reason for this is the banks will potentially look at this as 100% income from the rent that you're getting applied to the salary that you have, and that kind of offsets the salary required. And now you're only going to require $38,000 to be able to afford a home like this. This is very cool, and you should really look into this. If you cannot afford this number, maybe you get together with a group of people, friends or family, each put down that you guys can be, so each put down so you guys are able to afford something like this. All right, now let's look at where we need to be. So this is a positive cash flow property. How much of a down payment is required? Let's see if it is 30% down. Would that make this a cash flow property? Not quite. Let's move it down to 35% down. And there you go. This property now becomes a cash flow property if you were to put down 35%, which is almost $170,000. The monthly payment now is down to almost $1,600. Now, on a month-to-month basis, your rent will be able to cover the mortgage, which leaves you with 70%. Now, if you do the potential 5-year return on investment on down payment, rent, equity, property value increase, you go down to 66.41%. The reason this happens, that it goes down to approximately that much, is because the return is less because you're putting down that much more. Now, a big thing that we also like to look at is what would be your yearly return on your down payment with rent alone versus as putting it down in the bank. So right now at 35%, you're getting 0.5% of your money. So how do we push that needle? Let's see where we want to be here. Let's move it up to 40%. You can see it rises to 1.21. We go down to 45. It goes to 1.75. Let's go to 75%. Look at that, 3.49%. Now, look at your down payment at almost $360,000. However, you're going to be making 3.49% on your money. Now, that is a heck of a lot more than putting it in a bank, and that's why we like to do this exercise here, that you can make a potential 3.49%. Thank you so much for taking your time and checking out this channel. We do appreciate it. This channel will get better in time. This is, again, the second episode this season. And we do have a great team behind us, the marketing team, which is Movement. And hopefully this will come to your feed across all social media platforms. And you do enjoy the content that we do produce. Please do like and subscribe to this channel and leave a comment below. Let us know if there's a property that you would like us to do analysis like we did towards the end of this show. Well, I guess I should end this show now. Sunny out.